stocks that can go up 10 or 20-fold or more, that's where they are. You know, they're in Shanghai and Shenzhen, and you can buy them in Hong Kong and Singapore. And this is where really wealth. I mean, imagine investing in the United States, you know, around 1880 or 1890. I mean, getting in early, right? Or getting into Japan. I mean, buying into Japan at the end of the Second World War when the country was a wasteland. You know, there was a lot of profit to be made. I think that this is going to be a boom, especially when they sever the cord with the United States. Because I am convinced that we're the caboose, we're not the engine of the global economy, that this is wrong, that this whole idea that this is a symbiotic relationship where the world saves and we borrow, the world produces and we consume, that this is somehow a good thing, that is just as nonsensical as the paradigm of the internet stocks or the paradigm of the housing bubble. And I think when they write the history books on this era, that is going to be the theory that gets the most criticism. And you know, 100 years from now, people will laugh at us. That we, you know, you read some of these books, you know, you read, you know, the Popular Delusions and the Madness of Crowds, and you think, gee, how can these people have been so stupid? Well, now you know. This is how. But anyway, let me open it up and start taking some questions, because I know I've been talking a long time. All right, gentleman in the sweater.
I think we had to trace some of Obama's help for the auto industry to the donations he got from the UAW.
Well, of course. I mean, why do you think he went to Copenhagen to try to get the Olympics over here? Right? I mean, because of the politics, the favors that he owed. You know, it was funny. I gave an interview to the Washington Post. I talked about my candidacy, and they asked me, you know, do you want to, you know, are you going to become a politician? Is this a career change for you? And I said, no. I said, I don't want to be a politician. I don't want a career in politics. I'm interrupting my career to go into politics because it's a disaster, because the career politicians have made a mess of the country. And somebody has to go to office who's not a politician to help solve these problems. And I said it's kind of like in the Second World War, people who were not career soldiers, people from all sorts of occupations, temporarily left their job to fight in the war because there was a cause worth fighting for. And I said they went off to Germany, they fought the Nazis, and then they left. They went back to their jobs. And I said, you know, I'm not saying what I'm doing is heroic like a soldier because I'm not going to get shot at in what I'm doing. But the point is I'm interrupting my career. I'm not becoming career military. I'm not going to, you know, I'm not a career politician, but I'm going to leave. And immediately all over the newspapers, you know, Peter Schiff calls Democrats Nazis. Peter Schiff compares running to fighting Nazis. Peter Schiff calls Chris Dodd a Nazi. I mean, it even made the Ed show on CNBC. Look at the, you know, Nazi all over the internet. And then I went on my video blog and I said, I didn't compare the Democrats to Nazis. I mean, the Nazis got the Olympics. And then I had to say that was a joke. Although they're certainly, look, they may be fascists, but they're not Nazis. But I can't even say that because people don't know what fascism is. But unfortunately, we got it. Any other questions? Yeah. Yeah. Yes, we will. Everybody goes back to the gold standard. Well, that I don't know. But you can put yourself on the gold standard. I mean, you know, people, you know, you need to save gold. I mean, that's what people all around the world are understanding. You know, the reason that gold is now over $1,000 an ounce, people understand that they were conned by politicians. For a while, people had faith in central banking. They thought that the central bankers were real independent, that they were going to hold the politicians' feet to the fire, that they were going to keep money scarce, that they were going to take away the punch bowl, that they were going to do all the stuff that independent central bankers were supposed to do. Well, of course, they now know that was a bill of goods, right? The central bankers are politicians with printing presses, and they're there to keep their buddies in office. So people understand that they want to save gold. And you know, there's a lot of people all around the world, you know, that don't own gold. How many people in this room don't own gold? That's a lot of hands. You know, eventually everybody in this room will own gold. Hopefully you'll buy it from me. But you're going to own it. But if people all around, and this room is probably, you know, you probably got a higher percentage of gold holders here. And I can speak in front of a normal audience and say how many people own gold. An audience this size, maybe 5 hands will go up. Right? Imagine what the price will be when all the hands go up. But people are going to realize that money can be created out of thin air. And they're going to keep creating it. Gold can't be. Gold is very hard to find, very expensive to mine. That's what you want. If you want to know, if you have gold, you can put it in the ground and your grandchildren can dig it up and spend it. You put paper dollars into the ground, you might not be able to spend, you dig it up yourself in a couple of years, it might not have any value, let alone 100.
Ron Paul's bill to tax you wanted the Fed passed, and do you think we should abolish the Fed?
I get that question a lot. In an ideal world, yeah, I would abolish the Fed. But the problem is, in my mind, is, what is going to replace it? And my fear would be that we would replace it with something worse. So unless I knew exactly what was going to follow abolishing the Fed, I think it's better to reform it and to try to return it to its original missions, which was Federal Reserve notes were backed by gold, 40%, and 40% and 100% commercial paper. And the original Federal Reserve Act made it illegal for the Federal Reserve to buy treasuries. Let's go back to that. Let's stop. We don't want the Federal Reserve to be an engine for inflation. But so that would be something that I think would be easier to get through Congress, reforming the Fed than just abolishing it, and potentially giving the printing press to Nancy Pelosi or Barack Obama, or giving them, I mean, they might even make a bigger disaster. It's the idea of the devil, and understand. Yeah, well, we certainly got a devil here, but who knows, what more damage they could do. Yes.
I'm confused about something. I've heard people like Robert Rector talk about inflationary depression, and they keep hinting on this thing about we really don't have any credit, that money isn't really just the dollars, it's also credit.
Sure.
And no expansion of credit, and that really confuses me.
Yeah, well, here's, under normal circumstances, you have an inflationary boom and a deflationary bust. That's how it works. The deflationary bust is the good thing, right? We want prices that are too high to come down. That's what's supposed to happen. Credit expanded and then it contracts. And if we were on a gold standard, that is exactly what would happen, right? And in fact, if you are going to price things in gold, right, from the vantage point of gold, that is what will happen. Prices will all come back down in terms of gold. Stock prices will fall in terms of gold. Real estate prices will fall in terms of gold. Consumer prices will fall in terms of gold. That's all going to happen. But where the deflationists get it wrong is they apply that to paper money. They apply that to US dollars. It ain't going to happen with US dollars, because the politicians can print an unlimited supply of those. And the politicians look at deflation as the enemy. And they think their job is to prevent it. And Ben Bernanke, he got his famous nickname of Helicopter Ben when he said, we have an invention that's called the printing press, and we can always generate a positive level of inflation because we can dump dollars from helicopters. They sent stimulus checks to everybody, and they sent everybody, what were they, $150, $200? They can send everybody $1 million. They can send everybody $1 billion. There's no limit to what they can print. And if they think that that's what they have to do in order to not tell people that they're not getting their Social Security check, or that their bank account is empty because the bank failed, they'll print the money. And that's what happens. So deflation in terms of gold, massive inflation in terms of paper dollars. Yeah.
Peter, with the foreign central banks, or with the Fed buying all this agency debt, don't you think the foreign central banks are just trading their agency debt for treasuries? I mean, is that what are they selling their agency debt to the Fed and then turning around buying treasuries?
Yeah. And in fact, one of the things that's going on is, you don't see all this monetization, but a lot of the banks are buying long-term treasuries. But it's with the Fed's money, because they're going to the Fed and borrowing for free and lending it back to the Treasury at 4%, and they're making a spread for taking no risk, although the risk they're taking is that interest rates go up, but their buddies in the Fed said, don't worry, we'll never let them go up. So they're making it free money, but in effect, the Fed is monetizing the debts through the banks. And of course, because the banks are lending all this money back to the government, there's nothing for an entrepreneur to start a business. So there's no new jobs that are going to be created, because you can't have jobs without capital. And also, you can't have jobs without a profit motive. And if entrepreneurs don't see the opportunity to make a profit because the government is taxing them, right, there's nothing there. So the whole thing is doomed. Yeah.
How high do interest rates have to go to stop the massive influx of dollars back into the U.S.? And has there been any time when raising it has stopped it once?
Yeah, well, we stopped it. Paul Volcker raised rates up to 20% in 1980, and that saved the dollar at that point. we couldn't even, I mean, imagine what would happen with 20% interest rates today.